So you invest in stock market. Then tell me this, how do you pick stocks? What factors do you look at when you buy or sell a stock? Are you still relying on those financial gurus that you see on TV that give you a stock tip, along with that tell you the stop loss and the target? If yes, let's change that. In this video and the upcoming ones, we will dive deeper into the world of fundamental analysis and learn how to pick the best stocks for your portfolio. If you ask me how do I do this, here is my answer. If you really like reading books, I would highly recommend you to read this one, and specifically about this guy Peter Lynch. If you don't know about him, here is a short introduction. He is one of the best fund managers the world has ever seen. He managed Fidelity Magellan Fund from 1977 to 1990, and guess the annualized return under his management, 29.2%. Yes, you heard it right. Basically, if you had given him 10 lakhs, he would have turned it into 2.7 crores in 13 years. Magic, isn't it? Let's learn from him. I'll start with very basic concepts and then we'll dive deeper into his investing style. This brings us to the first concept, which is market capitalization, also known as market cap. Now, the whole world is obsessed with this idea. In fact, all the indices that you know of, I'm pretty sure, be it Nifty, Sensex, Nifty Next 50, small caps, mid caps, large caps, they are all based out of this concept. In fact, you talk to any investor, his investing strategy would revolve something around this. Some percentage of money in large caps, some percentage in small caps, some percentage in mid caps. But what if I tell you something is even better than this? But that's a topic for another video, but I'll just give you a small sneak peek, which is strategy indices. These broad market indices, they are not that great compared to those strategy indices. If you want to check out those, go to nseindia.com, click on market data, click on indices, you will see broad market indices. Under that you will see thematic indices, then you will see strategy indices. Inside that you would see momentum indices, value indices and all those things. Look at the performance, they have performed even better than these broad market indices. Now, coming back to market capitalization, what exactly it is? So the formula looks something like this. Market cap is equal to share price into number of outstanding shares. Now what does that mean? It basically means if you want to buy an entire company, this is the amount that you will have to pay to buy the entire company. Let's take an example. If you want to buy the entire IDFC First Bank, how much money do you have to pay? This is the amount you would have to pay. Look at the market cap of IDFC First Bank. This is 54,251 crores. This is the amount you will have to pay to buy the entire IDFC First Bank. But can you buy it? Not actually, because not everything is up for sale. And I can explain that concept to you, which is called as free float market capitalization. That's a different concept altogether. But basically, this is the amount you will have to pay to buy the entire IDFC First Bank if it is up for sale. Now, have you heard about large caps, mid caps, small caps? Do you know what exactly is that? See, if the market cap of any company is more than 20,000 crores, then it is basically a large cap. Examples are TCS, HDFC Bank, even IDFC Bank, because it is more than 20,000 crores. Then we have mid caps. If the market cap is between 5,000 crores and 20,000 crores, we call it a mid cap stock. Then finally we have small caps. If the market cap is less than 5,000 crores, then this company is called as a small cap. Then we also have micro caps, which is if the market cap is less than 500 crores, we call it a micro cap category. Now, please have a look at this whenever you want to buy or sell any stock. Always. Because as I said in my previous video, these small caps and micro cap category stocks, they are really risky. In fact, try to allocate not more than 20% of your entire portfolio in this small cap and micro cap category. If you want to know the reason why, here is the answer. In India, it is cited that almost 90% of the startups fail. Now I know startups and small caps are not the same thing, but that brings me to the second point. The SME sector in India is closely linked with the small cap companies. According to a few reports, 20 to 30% of the small cap companies fail within 5 years. And between 2015 and 2020, around 200 to 300 companies got delisted from the Indian Stock Exchange. And guess, the majority of those companies were small cap companies. So it's really risky to invest in small caps, but you can get a lot of returns also from it. It's simply a high risk, high reward game. Now, coming back to our favorite fund manager, Peter Lynch, his favorite category was small caps and micro caps. He used to say, and I quote, "Big companies have small moves and small companies have big moves." So his investment style revolved around finding a really good small cap or a micro cap company and then gaining 1000% from that. But that requires a lot of expertise. To you, I would highly recommend you start with really less, allocate less than 20% for your small cap, micro cap sector, and then as you gain more confidence, you can increase this percentage even more, but start with really less number. Now I know this could be pretty basic for a lot of you, but I really want to cover every single thing from scratch. In a few weeks, we will dive deeper into really advanced concepts, and I hope you will like that as well. Now, if you have just started building your stock market portfolio, please make your mutual fund portfolio first. If you need help, watch this entire playlist for that.